There is a powerful financial tool sitting in the hands of millions of veterans across the United States, and the majority of them have never fully taken advantage of it. The Department of Veterans Affairs Home Loan Benefit is one of the most generous mortgage programs ever created. Yet countless eligible veterans either do not know it exists, misunderstand how it works, or believe myths that stop them from ever applying. This is not just a loan program. It is a lifetime benefit earned through service, and understanding its full potential could save veterans tens of thousands of dollars over the course of their lives. The Department of Veterans Affairs does not actually lend the money directly. Instead, it guarantees a portion of the loan made by private lenders, which gives those lenders the confidence to offer terms that would otherwise be impossible in the conventional mortgage market. That guarantee is what unlocks the extraordinary advantages that come with this program, and those advantages go far deeper than most people realize. The most well-known feature of the Department of Veterans Affairs home loan is the ability to purchase a home with zero down payment. But the significance of this benefit is often underestimated. In the conventional mortgage world, a buyer typically needs to save anywhere from 3 to 20% of the home's purchase price before they can even begin the buying process. On a $300,000 home, that could mean saving between $9,000 and $60,000 before a single offer is made. For veterans using their benefit, that barrier simply does not exist. The ability to move into homeownership without years of saving for a down payment is a life-changing advantage, especially for younger veterans or those transitioning out of active duty who may not yet have had the opportunity to build significant savings. Beyond the immediate financial relief, eliminating the down payment also means veterans can preserve their cash for other priorities, whether that is emergency savings, home improvements, investments, or simply maintaining financial flexibility during the transition to civilian life. This single feature alone sets the Department of Veterans Affairs loan apart from virtually every other mortgage product available to the general public. Here is something that surprises many first-time homebuyers when they start exploring conventional loans. If you put down less than 20% on a conventional mortgage, you are required to pay private mortgage insurance every single month until you have built enough equity in the home. Private mortgage insurance protects the lender, not the borrower, and it can add anywhere from $100 to $300 or more to a monthly mortgage payment depending on the loan size and the borrower's credit profile. With a Department of Veterans Affairs home loan, there is no private mortgage insurance requirement, ever. Not when you put zero down, not when you put 5% down, not at any point during the life of the loan. This is a massive ongoing savings that compounds over time. Over the course of a 30-year mortgage, eliminating private mortgage insurance could save a veteran anywhere from $36,000 to over $100,000 in total payments. That is money that stays in the veteran's pocket, rather than going to an insurance company that exists solely to protect the bank. Because the Department of Veterans Affairs guarantees a portion of each loan, lenders take on significantly less risk when issuing these mortgages. That reduced risk translates directly into lower interest rates for veterans compared to what they might qualify for on a conventional loan. Even a difference of half a percentage point on a mortgage interest rate can mean tens of thousands of dollars in savings over the life of a 30-year loan. However, there is one cost that veterans need to understand before applying, and that is the funding fee. The funding fee is a one-time charge paid to the Department of Veterans Affairs to help sustain the program for future generations of veterans. The amount varies based on several factors, including whether it is a first or subsequent use of the benefit, the size of the down payment, and the type of loan. For a first-time user with no down payment, the funding fee is typically around 2.3% of the loan amount. The good news is that this fee does not have to be paid out of pocket. It can be rolled directly into the loan, spreading the cost over the life of the mortgage. Additionally, veterans who receive disability compensation from the Department of Veterans Affairs are completely exempt from paying the funding fee, which is a significant savings that many disabled veterans do not know they qualify for. One of the most misunderstood aspects of the Department of Veterans Affairs home loan is the concept of entitlement. Many veterans believe they can only use the benefit once, or that once they sell their home, the benefit is gone forever. Neither of these things is true. Entitlement refers to the dollar amount the Department of Veterans Affairs will guarantee on a loan, and it can be restored and reused multiple times throughout a veteran's life. When a veteran sells their home and pays off the Department of Veterans Affairs loan in full, their entitlement is restored and they can use the benefit again on a new purchase. There is also something called bonus entitlement, sometimes referred to as second-tier entitlement, which allows veterans to have more than one active Department of Veterans Affairs loan at the same time under certain circumstances. This can be particularly useful for veterans who are relocating due to a permanent change of station or a job transfer and need to purchase a new home before selling the old one. Understanding how entitlement works opens up a level of flexibility that most veterans never realize they have access to. Another common misconception is that the Department of Veterans Affairs home loan requires perfect credit. While lenders do have their own minimum credit score requirements, the Department of Veterans Affairs itself does not set a specific minimum credit score for loan eligibility. Most lenders who issue Department of Veterans Affairs loans will work with credit scores as low as 580 to 620, which is significantly more accessible than the requirements for many conventional loan products. Beyond credit scores, the Department of Veterans Affairs loan program also takes a more holistic view of a borrower's financial situation. Lenders are required to evaluate what is called residual income, which is the amount of money left over each month after all major expenses are paid. This approach often benefits veterans who may have had financial challenges in the past, but are now in a stable financial position. It is a more human approach to lending that recognizes the realities of life and military service. The Department of Veterans Affairs. Home loan benefit does not stop at the purchase of a home. Veterans who already have a Department of Veterans Affairs loan can take advantage of the interest rate reduction refinance loan, which is one of the most streamlined refinancing options available anywhere in the mortgage industry. The interest rate reduction refinance loan allows veterans to refinance their existing Department of Veterans Affairs loan to a lower interest rate with minimal paperwork, no appraisal in most cases, and no income verification requirement. It is designed to make the process as simple as possible so that veterans can quickly take advantage of lower rates when the market shifts in their favor. There is also the cash-out refinance option, which allows veterans to tap into the equity they have built in their home and use those funds for anything from home improvements to debt consolidation to education expenses. Together, these refinancing tools give veterans ongoing financial flexibility long after the initial purchase is complete. Every veteran who has served the minimum required period of active duty, or who has been discharged under conditions other than dishonorable, should take the time to understand exactly what this benefit offers them. The first step is obtaining a certificate of eligibility, which confirms to lenders that a veteran qualifies for the program. This can be done online through the Department of Veterans Affairs website, through a lender, or by submitting the appropriate paperwork by mail. From there, working with a lender who specializes in Department of Veterans Affairs loans makes an enormous difference. Not all lenders have the same level of experience with this program, and choosing one who understands its nuances can mean a smoother process and better outcomes. The Department of Veterans Affairs home loan is not a handout. It is compensation for service rendered, a benefit built into the fabric of what this country offers those who have worn its uniform. Using it fully and wisely is not just a smart financial decision. It is honoring the commitment that was made when the uniform was first put on.